I will make note of that for my minute.
Okay. All right, then why don't we get started? So good morning, everyone. It's the governor. The first thing I need you to do is, if you're on a phone that will mute your phone unless you're speaking. Because if you don't mute your phone, it's incredibly difficult for everyone to hear. It might delay getting the roll call done as efficiently as we want, but it's really important for people to be able to hear during the meeting. Two, I want to thank everyone for your patience and leadership. This is the first ever, as I understand it, a completely telephonic meeting of the State Investment Council. And given the situation that we are all in and facing, I think it's not only effective role modeling and leadership, I firmly believe that we are safeguarding the health of each other. And so I'm very grateful that folks are leaning in to doing that to the highest degree possible. And with that, Carrie, why don't we do the official roll call, and we'll go to the next item on the agenda, which would be the approval of the agenda.
And Governor, I am going to do a staff and consultant roll call just so we officially have a record of who has been on the call today. So
okay, perfect.
Governor Lujan Grisham.
Present.
Commissioner Garcia Richard.
Stephanie Garcia Richard is present.
Treasurer Eichenberg.
Present.
Peter Frank.
I'm here, yes.
Linda Eiston.
Present.
Tim Jennings.
Present.
Harold Lavender.
Here.
Lee Rawson.
Present.
Michael Messina.
Present.
Nick Hayes.
Present.
John Bingaman.
Present.
Steve Moise.
Present.
Vince Smith.
Present.
Evan Land.
Present.
Brent Shipp.
Present.
Charlie Woolman.
Present.
David Lee.
Present.
Paul Chapman. Darla Bennett. Chris Cassidy.
Present.
Clay Camper.
Present.
Clayton Cleek.
Present.
Mikhail Kuznetsov.
Present.
Bruce Brown.
Present.
Marcia Beard from RBK.
Present.
Matthias Bauer.
Present.
Richard Pugmire from Mercer.
Here. We also have Alan Waldrop and Amy Rich from Mercer.
Do we have any Townsend representatives this morning? And from Sun Mountain, I know we have Lee Rand.
Here.
Brian Burke.
He'll be joining shortly.
All right, thank you. And do we have any representatives from Bain Capital on the phone?
Yes, Steve Radakovich, Darren Abramson, and Phil Michael are all on the line.
Thank you. Is there anyone else on the line that I have not identified?
Sally Levin from Sun Mountain Capital.
Thank you, Sally.
Stern Levin at SSC.
Thank you. That's it, Governor. I think we can continue on.
All right, thank you very much for the roll call and introductions of folks on the call. I appreciate that. We are on still item 1, opening matters. We are on item number E, which is approval of the agenda. And I'd actually like to make a motion that in item 4, 4E, the New Mexico Recovery Fund, I would like to move that to the top of the investment matters section 4, because I can only be on the call for an hour. That's 10 o'clock is our COVID-19 staff briefings. And I know that you all are and thank you for that. Clear that those are priority meetings, and I just can't miss it. And I really want to participate as meaningfully as I can on the New Mexico Recovery Fund as it relates to making sure that we're doing everything we can to minimize or mitigate or redirect the real economic harm related to COVID-19. So I move that 4E be moved to 4A on the agenda.
Madam Chair.
Actually, I'm wrong.
Richard,
I think I did that.
that.
Pardon me?
Stephanie Garcia Richard will second.
Okay, but I need to amend my motion. I think I need it right after the consent agenda in order to have enough time to do it all. I'm just looking at the reports and the amount of time. I might just hold on that motion for a second. Steve, do you mind? Will we have enough time if I leave my motion intact so that we move it from the end of item 4 to the very beginning in that section? Or should I do it right after the consent agenda?
Governor, I would recommend that you move it to the position immediately following the consent agenda.
All right. Then I'm going to amend my motion. I apologize. I just wasn't adding up the time. My motion, Vice Chairwoman, is to move item 4E to discussion and a vote immediately after the consent agenda.
And I'll second that, Stephanie Garcia Richard.
Okay, thank you. Do we have any discussion? Any objections? So all those in favor say aye. Aye.
Aye. Aye. Aye.
All right, I believe the motion carries. Thank you for letting me amend that, and thank you. Are there any other recommended or proposed changes to the agenda? Hearing none.
I move,
Oh,
I was just gonna say, I move we approve the agenda as amended.
all right. Is there a second?
Second. Jennings.
Any discussion? Seeing none, hearing none. All those in favor of approving the agenda as amended, say aye.
Aye.
Aye. Any opposed? Any abstained?
Aye.
The motion carries. Thank you. All right, we're now on item 2, which is the consent agenda. Item 2A is approval of the State Investment Council minutes from February 25th, 2020. Do I have a motion to approve the minutes?
So moved. This is Linda Eisen, so moved.
All right. Do we have a second?
Campbell, second.
Thank you, Senator. Is there any discussion? All right, all those in favor of approving the minutes of February 25th, 2020, say aye.
Aye.
Aye. Any opposed? Any abstain? The motion carries. Thank you. We're now on item 2B, the financial budget to actual report. Steve, are you handling that?
I believe Brent is handling that.
Okay, I don't have it on my agenda. Brent, would you proceed with item 2B on the consent agenda, please?
Yes, Governor. I really don't have any comments. That's on the budget to actual schedule for the month. I believe Olivia PTA Jackson suggested that we put it on the consent agenda, and that's the reason that it's there.
All right.
This is Treasurer Eichenberg. I'll move approval, Governor.
Thank you.
Second.
Mr. Treasurer, do we have a second?
Second.
Is that Harold?
Yes, it is. I'm sorry, I'll identify myself.
That's all right. This will be a little challenging. I want to make sure that Carrie gets what she needs and that I'm managing as productively as I can. Thank you for everyone's patience. Any discussion of the budget to actual report? All right. All those in favor say aye. Aye.
Aye. Aye.
Any opposed?
Aye.
Okay. And anybody abstain? appearing that we have a unanimous aye. Item number 2B on the consent agenda is approved. So we are now on the amended agenda, and the next item is the New Mexico Recovery Fund. And Steve, I believe you're going to initiate leading us on that.
Thank you, Governor. Good morning, all. Today's council materials contain a March 19 memo from your staff and a concept memorandum, both related to a proposed New Mexico Recovery Fund. As you know, the Severance Tax Permanent Fund permits economically targeted differential rate investments. In an effort to be creative and helpful to New Mexico businesses which need access to additional credit facilities due to the COVID-19 impacts, your staff has worked with the Office of the Governor and Sun Mountain Capital to design a credit vehicle for your consideration. This fund is recommended to complement programs being created by the federal government, as well as other efforts being put forward by the state. You all know that the SBIC's lending programs are focused on small business loans. The New Mexico Recovery Fund would be focused on larger business credit needs. The SBIC has funds available for additional loans due in part to the additional 1% of the severance tax fund, which was authorized by the legislature and the governor in 2019. You've all seen the memo that was included with the materials, and as we explained in that memo, capacity exists for this new fund under the existing Severance Tax Permanent Fund statute. Your staff has analyzed the amount which can prudently be allocated to this new fund, and we are recommending up to $100 million. This amount would be part of the recently increased 11% cap. The fund is to be structured using a private fund model. It would offer below market rate, relatively short-term loans to businesses. Specific terms and guidelines would be published containing uniform criteria, creditworthiness requirements, and other specifics. We're mindful of the need to move quickly to assist businesses, and we recommend using the SIC's long-term investment partner, Sun Mountain Capital, to administer the program, rather than pursuing an extended RFP or ITB process. Sun Mountain has an existing structured debt fund. They have in place staff with credit-related skills, but additional staff will likely be needed. More details regarding Sun Mountain Capital are contained in the memo. Sun Mountain representatives are on the phone and prepared with brief comments and available to respond to any of your questions. And Governor, if it's agreeable, I would suggest that we ask Sun Mountain to offer some additional perspective.
Steve, thank you. I was going to suggest the very same thing. Sun Mountain, do you, would you please also talk to us about the opportunity here and the role of the fund, and get us poised for questions, please?
Yes, hi. Good morning, Governor and council members. This is Brian Burke from Sun Mountain Capital. I'm joined on this call by Lee Rand, another partner at Sun Mountain. I'll keep my comments brief. I think we've all seen the need for this kind of financing. Many New Mexico businesses have been and will continue to be significantly impacted by coronavirus. And ironically, as revenues decrease, companies are finding themselves in a cash crunch, not only because of that decreased revenue, but also they find that their ability to actually borrow from existing lending sources has also decreased as their revenues have dropped. So the recovery fund is an attempt to help these companies get through this short-term cash crunch. The plan for the fund is to make available on a relatively short-term credit financing instrument for these companies that are based in New Mexico. We're going to target, as Steve said, more substantial companies, ones that have significant employment bases in the state, and ones that have a realistic plan, the financial wherewithal, and also the performance history to weather this crisis with a little bit of assistance from the recovery fund. We believe that speed is of the essence here. Many companies will be out of business in 90 to 120 days, so we've got to move very, very quickly. I would just like to add for Sun Mountain Capital, as Steve mentioned, we are headquartered in the state. We've worked hand in glove with the State Investment Council and the State Investment Office for almost 14 years. I believe we know the business landscape here, and our team has both equity and credit investment expertise and professionals on staff. With that, I would turn it over to the chair and be willing to answer any questions that might come up.
Thank you very much, Brian. So at this point, are there questions, concerns, or any discussion about the proposal?
Physically, I have a few questions.
Okay, Senator, please proceed.
I'd like to get a definition. Okay, I'm sorry. I'd like to get a definition of the large company versus the small company.
Yeah, thank you, Senator Austin. We look at this fund as targeted towards companies that currently have no program in place. For smaller companies, we believe there are actions in place at the SBA, and also what we've heard is that there are other actions taking place at the state to help address those smaller companies. The very large companies, for example, the P&Ms of the world, this fund would not be adequate. There is a sweet spot in between those two sizes that we believe this company operates in. We think that this profile would be a company with material revenues, tens of millions of dollars, and substantial employment base.
Well, I'm a little.
Go ahead, Senator, keep asking questions. I apologize.
Okay, I'm just concerned that that's too high a target. I mean, I do think at what point that becomes corporate welfare, but I do think that there are those mid-range companies that have over 50 employees that have been shut down that are required to advance payroll for those employees for as long as this thing is off, and they can only deduct that from the payroll taxes. And of course, they can ask for a refund, but let's face it, that refund is going to be at the end of the second quarter, which means they're not going to get paid till maybe July, if they're lucky. So we have people who might have 50 employees, even it could be like could even be a restaurant that have to go ahead and pay that salary who don't have the liquid cash flow. Those types of medium-sized businesses. I mean, they're not a small business, but they're not the large corporates like the P&M or those type of guys. But you got these medium-sized guys, but they can't make payroll for 90 days without income. So I'm concerned that maybe your target is too high from what I'm hearing, or the number of employees. I'd like to kind of get that refined a little bit, because I think the part that's really going to need help is those kind of mom and pop businesses that have grown up and they don't have the resources to sustain it.
Councilmember Rawson, yeah, thank you for that comment. And I think our thinking on where the sweet spot is for this fund is consistent with where you see the need. We believe that a substantial employer in New Mexico is a firm that has, 40 to 50 and more employees and larger, and a minimum revenue threshold of probably $10 to $15 million. And I think, I think what the companies you're describing would fit into the strike zone for this program.
Brian, this is Steve. Why don't you just mention the fact, or maybe I will, that you are and we are together with you going to be develop more detailed guidelines. And as we get those developed, I think we'll be able to focus more on exactly where this is intended to serve. Any comment on that?
Steve, you need to speak in the microphone. You can't hear you.
Okay, from Lee's standpoint, I'm concerned particularly when we have included in the memorandum those companies who might be headquartered out of state. I mean, our commitments to the people of the state of New Mexico, not the companies that exist out of state, even though they employ New Mexico employees. I would be very guarded against extending it to those. And I don't know who you have in mind that might fit that niche, but I would rather restrict this to New Mexico-owned companies so that they can afford to pay their payroll expenses. I mean, that's the big issue there. I am also concerned that the projected rate at 6 to 12%, let's face it, if we're talking about a company that's already viable, they can pretty much go to the bank and could probably get that money for 5% without much of a problem. So the 6 to 12% rate that I'm reading isn't, it isn't really an attractive deal there. So I just want to maybe some comments on that from Sun Mountain.
This is Steve.
Sure.
This is Steve. I hope you can hear me now. What I'm going to suggest is that we take Lee's comments and anyone else's comments into consideration as Sun Mountain drafts the specific guidelines for this fund, and that we take care to try to incorporate those. Sun Mountain will be working with Evan on the specifics, and we'd like to hear from any of you that have suggestions. So, Governor, if that would be workable, if we could just listen to these things and take note of them, I think that might expedite the discussion. Thank you.
Steve, this is the governor, and Brian, thank you for answering and leaning into Senator Rawson's questions and comments. And Senator Rawson, I agree with you philosophically on making sure that the focus is New Mexico-centric, being clear that we have companies that have incredible presence in the state, and I'm worried about those employees, so I really want to think about those impacts. We will get a significant economic package out of the feds, and I wish I could tell you exactly what it will be between the failed Senate version of $1.8 trillion or whether it's going to be the House newly introduced bill of $2.5 trillion. One of the things in the House version that gives me great hope, and what we want to make sure is that where there are gaps, and there will be, that we're doing everything to create an opportunity for folks to have the resources they need to stay afloat and line up a new strategy to be viable. Because if we don't do that, then that part of the recovery from COVID-19 becomes nearly impossible. And we're getting to that breaking point. And I know that there's not anyone on this council, myself included, who isn't incredibly concerned about that. In the House version of the economic recovery bill, there is about $200 billion that would go through community block grant development awards. These really, I think, to states can be a vehicle where a loan for a small mom and pop, it may not be viable, that a local government grant for consideration to things that they will do in that local community, much like how we make investments for businesses in Main Street, may be the vehicle that shores those folks up in a more productive way. Companies like the large hospitality companies who, based on some of the bullet points in the memorandum, these are folks, to Senator Rawson's point, who can get loans and they might be able to get an investment, and it's a little bit better deal. But what we've always seen related to these recessions and incredible economic challenges, some foreseen, some not, is that the community banks and everybody else really starts to not lend money. They have their own investment and capital issues. And we don't want to see that preclusion begin to diminish the opportunities for economic recovery. So I really liked Steve Moise's, the director's idea, which is let's get everybody's concerns or ideas out so that and I hope that we'll have the votes. I feel very strongly about approving the fund. And then we get the details lined up as quickly as we can for a second vote by the council, which I think is prudent, and we'll know what's happening by the Fed, and we'll know how the Small Business Administration, additional set of investments to states, including ours, how that's working. I mean, it's a difficult process to go through, and it doesn't work for a whole lot of New Mexico businesses. So that gets us, so it's not just big business, but it's recognizing that we've got a huge employers or employers from 50 to 100 that we want to think about. And we don't want to be redundant with any other programs that are readily available. And to the degree that we can operate this fund in that manner without making it too hard for businesses, I think we'll strike the right chord and create the right opportunities to have economic recovery in the state.
Governor Frank.
Well, can I finish my comment?
Is this so let's do this. Senator Rawson, I thought you were done. I apologize. So let's have Senator Rawson finish, and then we'll go immediately to Member Frank.
Okay, no, I thought your comments were timely, so I didn't have a problem with that. So my concerns, I'll start again, was the size of the large, and I really would think that should be brought down to about 40 and up. I'm concerned about the out-of-state being on there. I'm very concerned that the projected rate is too high at 6 to 12%. I'm very concerned about a 7-year tenure of the term of the fund looks like it's a 7-year deal with a 1-year renewal. I think that's too long. I mean, we're talking about if the goal was to have companies that are viable that we're investing in, we're not just throwing money down the toilet. We're giving money to companies that are viable, have been viable, will return to be viable. We don't need a 7-year tail on this thing. I think that thing could be chopped to 3 years without much of a problem. Then if we're targeting the type of company I think we're targeting, 100 million isn't enough. I mean, just to be quite frank with you, the needs that are out there and will be out there if this thing is prolonged, if the governor's proclamation or the president's or whoever would extend the stay at home longer than the next 2 weeks, it's going to be significant. And I would just say we don't have enough money in the pot. The other thing I would note is that it looks to me, if I'm reading it right, that, I mean, I love Sun Mountain, and I like Brian and Lee and Sally, but I'm very concerned that we go into this thing with a preferred return of 4%, and then we get into this carried interest stuff at 7.5%, and they're getting paid $1 million a year already to manage it. And I know it takes resources, but it seems to me we ought to all buy into supporting the state, and it shouldn't be viewed as a profit center. But I mean, I would hope that Sun Mountain could really look at their fees and say, how can they be a real partner with the state and maybe how to trim this a little bit lower so we can get more funds out to the people who need it. And that's the end of my comments. Thank you.
Thank you, Senator. Member Frank.
Well, thank you. What I heard you say, Governor, is that we would bring this back for another vote, and that concerns me because I think we need to, I'm just wondering what your thought is about how we could do that and maybe how soon we could do that, because I think speed is of the essence here. And if we're talking about a process that will take us several months to actually start getting money out, we will lose the benefit of the program that we're establishing.
Well, Member Frank, what I was suggesting is that as you refine it, that we might be able in a month to come back and talk about those refinements. But if you have a fund available, folks would already be in the queue based on the current outline, and you could do both simultaneously.
Governor,
I agree, Governor, I agree with that approach. I think, in other words, I think you're suggesting that we get started with the fund, we come back and reevaluate the standards the next time we have a meeting, but in fact, we are moving forward as rapidly as possible currently.
Correct. Thank you for allowing me to clarify. Correct.
Governor, this is Steve.
Who else wanted? Oh, go ahead, Steve.
Governor, if I may, is there any way that the council might permit staff and Sun Mountain to go ahead with this fund, listening to your concerns, incorporating your suggestions into the guidelines without needing to come back again 30 days from now? Or is that too much to ask?
Could I put it another way, Steve?
Yes, go ahead, Member Frank.
I think that we should move ahead and we would come back in 30 days to describe what decisions you've made and what standards you've established. And if at that point we have to amend, we can amend. But in the meantime, I think we leave to staff to go ahead and start implementing this program today.
If I may ask Sun Mountain if this timeline is workable, knowing that we need to get this done as quickly as possible. Brian?
Yes, I believe that we can move forward as articulated by Member Frank and the Governor.
Now, is it okay? Can I speak?
Yes, you are recognized, Senator Jennings.
You know, I think one thing, I think you have to be real careful because whatever happens here, and look, if it all, hopefully it all goes great. But if you don't come back and look at it before, you know, and come up, if we have to have a special meeting, we can have one. But we should come back and look at it and talk about it before, and approve the final versions before we just get ready to send out money. I think you have to understand too, I think there's a lot of cash out there. I mean, we're in a place right now where nobody has any place to invest, or had any place to invest except the stock market. So there is a lot of cash out there, even for local banks to work on that and use credit and through local banks. And, you know, some of the things we might do is might figure out how to maybe provide a guarantee fund and have local banks do it, because there's a lot of cash out in the marketplace, as I see it. I mean, it just seems like right now there's no place to put your money. We might be better off trying to develop a guarantee program than we would be trying to reinvent the wheel with government money when there's plenty of money in the banks now to loan. I mean, to me, there's plenty of money. Every bank I know has got cash. So,
Madam Chair?
Yes, is this Mike Messina, Member Messina?
Yes, Governor.
Please
I'd
proceed.
like to make, thank you. First of all, I think it's essential that this program start right away. It seems to me that we're mostly dealing with situations where companies are needing money for payroll, who aren't having their normal revenue, and if every week is going to impact these people that are depending on this income to support their families and survive through this crisis. We don't need to delay. I think it's really important to act. Number two, although I appreciate the idea that Senator Rawson put forth that we should be doing New Mexico companies, and I think we should be prioritizing that. I don't think we should rule out out-of-state companies that have a substantial workforce in New Mexico that might need this help, because we're really talking about helping companies support their people, and those are New Mexicans. Thirdly, I'm not troubled by the 7-year idea. The fact is, that doesn't mean that you're going to extend credit, but, we can renew credit if it's working, if they still have the need. But to put a deadline like that and to force a call on a loan that might be better negotiated is not a good idea. Doesn't mean we're going to extend a 7-year deal. It just means that the program may take that to work out. Finally, I wanted to comment, because it's true that banks have money, and if these companies can get support from the banks, they are going to be, but that doesn't mean that down and loan this money, especially the medium-sized New Mexico companies. Doesn't work that way. And I don't want to assume that it's going to be available and see people out on the street without income. So I really support acting now.
Governor, this is Harold.
Yes. Thank you. Go ahead, Member Lavender.
I'm curious, if we could ask Sun Mountain and the staff how quickly they think they could, I realize that we're in a crisis situation, how quickly they could put this together.
Brian, do you want to handle that question?
Yes, thank you, Member Lavender. We will have the program up and running in 2 weeks or less. We're moving as quickly as prudently possible. We can put in place the program pieces in parallel with the legal documents and the final signing of those. So we believe within 2 weeks.
Governor, I wonder if we might be able to just have a meeting, a special meeting in 2 weeks to go over what they put together. I mean, I agree with the idea that we got to get this thing going right away, and I don't see any reason to hold it up. So if we approve this, let the staff and Sun Mountain put a plan together, begin the process, and then let us see it and have comments about it, or maybe make suggestions, and even if need be, approve it. But I think that my feeling about it is we can wrangle about details forever. Let's just get this thing going.
Member Lavender, I agree with you. That was my kind of hybrid, which is authorize the fund. People, and not to disagree with Senator Jennings, I do think that there's money available, but it is not readily available to the people who need it. We are getting besieged, and we should. We should be besieged by calls, so is the congressional delegation, about what the stumbling blocks are and what some of the problems are. And that happened in the 2008 recession. Money was available, you couldn't get it out the door. And it means that we lost economic recovery opportunities that we should not have. And particularly at one segment, the hospitality industry with large hotels and thousands of employees, getting access so that we have a plan. They've got access to capital. They know what is occurring. They've got cash coming in the door. They can make adjustments and hold as many employees as possible. That's going to be critical to us, particularly in the summer. And while I wish we're late spring, I wish I had a crystal ball. And to Senator Ross's point, none of us know how the next couple of days or week is gonna, what it's gonna look like. But we should be doing everything we can on two fronts. The state should protect its citizens. I'm doing as much of that as I know how to do, right? Responding based on evidence and facts and doing things that we think mitigate the incredible consequences of spreading this disease. And also recognizing that we have an obligation to do everything that we can to support businesses who are in incredible situations and dire straits, and their employees. And I am really grateful to the SIC and to our Chief of Staff Bingaman and the Department of Finance and members who really worked to create this effort based on our statutory authority to do so. And I think that you can do both. I think you can act today, and I think we can refine, and we can get a presentation, we can make it an action item, we can do it in 2 weeks, as long as we're signaling to New Mexico businesses that we are not hand-rigging, as Member Lavender stated, over the finer details in a way that never allows anyone an opportunity to protect their business and to help us with economic recovery. So I'm really in favor of a vote today. I hope it's an affirmative vote, and I'm happy to get on our schedule, in 2 weeks, if that's enough time, and it sounds like it is for Sun Mountain Capital, to go over some more of the details. I think it informed council, who can continue to weigh in and refine, is productive. And that would give my office more time also to maybe provide more guidance based on the businesses that are contacting us.
I'll ask people.
Madam Chair, this is Linda.
Member Lavender, just one sec. Member Lavender, are you done with your comments and suggestions?
Governor, thank you. I do have one question I'd like us to address at some given point, and that is that if I understand correctly, can the SBIC, New Mexico SBIC, I understand there's a lot of capital, a lot of loan capital available there. Can we integrate something, their programs with this at some point? I'm not making that part of this particular motion or anything else, but I'm curious about that. But you know what? I think that we can talk about this for hours. I don't know what you're seeking, but I move we approve this program with incorporating the comments that we've heard today, and that we ask Sun Mountain and the staff within 2 weeks to come back to us with the plans.
All right, I'm going to take that as a motion. Do we have wait just a second.
Madam Chair, this is Treasurer Eichenberg, and I'll second.
Yes.
And I have a couple of questions.
Thank you. We have a second by the State Treasurer, and please proceed with your question, sir.
Thank you, Madam Chair and Governor. I'm excited that staff is going to stay involved in this over the next 2 weeks as we put this criteria together. I'm concerned about Sun Mountain and specifically of the potential conflicts that Sun Mountain might have in giving monies to just people that they've lent money to previously. So I'm glad staff is very much involved in this. I'm also concerned with what Senator Rawson brought up, which is the general partner and the differential interest rate. And I will give an example to Harold Lavender's comments about SBIC. In yesterday's meeting, we're trying to push out tens of millions of dollars at 1% interest. And that's what we're asking for, because we can break even at that. And we think that this is so, and I appreciate you, Governor, in bringing up $100 million here. I don't think it's enough. I think it's a start, but we need to protect the selection process and the criteria that's going to be used. And so all of those I'm throwing out there, kind of a hodgepodge, and I don't want to talk for an hour because I could talk on this for an hour. But I'm excited about it. I appreciate what you're doing here, and I look forward to, in a couple of weeks, to see what staff and Sun Mountain has put together for us. And again, Harold, if that answered your question, SBIC is moving on this, and we're doing it at 1% interest. And so I'm hoping that the 6 to 12 differential, as well as the 7.5% partner return, that all of those go to literally nil. Let's get the money out there. Let's worry about us getting something back years from now. And if we don't, if we just break even, we've done a service for the state of New Mexico. Thank you, Governor. That's all I've got.
Thanks, Tim. Thanks, Tim. I appreciate that. That was helpful.
Madam Chair, this is Linda
Make sure I
Eisen.
can hear everyone. Okay, Linda, Member Eisen, you're recognized.
Okay, I'm going to mention several things that I would like our staff and Sun Mountain to address, assuming that we re-examine this in 2 weeks. One
One is why we're doing a fund and not doing a separate account that might have lower fees. The other is this payment in kind provision and what kind of in kind might we end up with. Another is, will interest paid and loans paid off be recycled, or will we actually get distributions from this fund of that interest and pay off on loans? And the other is how we are bumping up against the 11% cap, especially as the fund goes down. How close are we to the 11% cap? Now, the other thing that I would like to do, and I'm sorry that I'm going to essentially be reading it, but for efficiency, it's much easier to read it than to have a discussion. And this is something that has not been brought up yet. So please bear with me, because I think it is something that we as fiduciaries need to examine before we approve this. I have personally been very torn on this investment. I am incredibly pained by what's going on with the COVID-19 and the effect on employees and employers. And this is unprecedented, and I'm very torn by that versus my fiduciary obligation as a member of the SIC. And we do not really, I mean, our job on the SIC is really not to help out the state in times of economic crisis. It is to protect our state permanent funds, to ensure funding for our public schools now and into the future, not to react to economic crises that our state has. The state has been very progressive and foresightful to create the permanent funds. As we all know, this has been very rare for other states to do. Over 60 years, we've been investing our oil and gas revenues, knowing that those oil and gas revenues are depleting assets. With the oil and gas crises that we also have simultaneously, we can see that those oil and gas revenues are not always dependable and recurring. But yet, our state and permanent funds have been providing very dependable, mostly increasing funds for our schools and running our state government. That's what it's for. But our state and schools have benefited from that now over $1 billion that we are distributed. However, the financial returns on our permanent funds, specifically the severance tax, has been adversely affected by several recent legislative actions. We have increased the SBI distribution from 1% to 2%, and this is money from our severance tax that will never come back to us. We don't get an investment return on it, and we never get that money back. So that money is basically gone. This has happened recently where it's increased from 1% to 2%. We recently increased the cap on the New Mexico private equity program from 9% to 11%. That is a cap, not a target. Yet, this is for investments in New Mexico at a differential, i.e. poor return. Yet this recommendation before us today for the recovery fund is an investment in loans in businesses that are in financial trouble due to COVID-19. And we may be approaching that cap of the 11% as the market continues to make the severance fund goes down. So we won't be able to do any more New Mexico investments as we start approaching that cap. So here we are in a risky $100 million investment. We don't even really know what the terms are yet because it's a work in progress. And it's a program that has very low expected returns. And as we make this decision, we must not only be considering what is best for our beneficiaries. I mean, that is what we're doing, is what is best for New Mexico education and schools. And this is true even in the New Mexico private equity program. We aren't relieved from our fiduciary duty just because we can get a, i.e. differential low return. Also, many of us wear multiple hats, and that can bring some benefits to us as SIC members, but it also brings potential conflicts. We're business owners, we're New Mexico private equity incubator employees, we're elected officials, all of these things that we must be very careful
what hat we are wearing when we approve this investment. Are we wearing the hat as fiduciaries, looking for what is best for our beneficiaries? I think the legislature should be looking at what is best for protecting the economy and citizens of New Mexico. But is this an investment that we can do both? That is where I am torn. That said, I am probably going to endorse this investment because I think, but I'm very, very concerned that this is some kind of a precedent that we're setting with the increase of the amount to the SBIC, the increase of the cap, now looking at a risky investment. We don't even know the terms that are aiding our economic benefit, not our beneficiaries' benefit. I don't want this to be the beginning of these continued adverse effects for, I think, our permanent fund. I will probably support this fund because I think that we are looking at safeguards to make this a fund that has a reasonable expectation of at least some return. I think this is an extraordinary time, and I'm hoping this will be the only extraordinary time where we think we can do both. But I think we must always be very careful, and we have all been speaking about the economic hardship. We have to look at the financial benefit to our beneficiaries of doing this also. We can't continue chipping away at these funds for purposes that are for economic benefit and not for financial return for our beneficiaries. So with that caveat, I just wanted to throw that out there. But I do think we need to be very watchful and careful as we vote on this. Thank you.
Member Eisen, I'm going to guess, this is the governor, that there's not a single person, and I appreciate your statements on this council, who doesn't wrestle with being an effective fiduciary and being prudent. And also, excuse me, I have terrible allergies. And making sure that we continue to have resources available for the key aspects, education in particular, for these endowment funds. But if kids' parents have no jobs and we have no economy, they won't be here going to school anyway. They'll have to move to a state where that's a reasonable outcome. We have to be careful, mindful, smart, prudent, fair, effective, and we have to put as many of these economic recovery ideas together. And then we've got to be really clear, as I think that Member Eisen is, that we're going to have some work to do with other policymakers, including the legislature, to make sure that everything's lined out as effectively as it can, and that we continue to be clear about the purpose of all of our investment funds. So I appreciate those comments, and it tells me we have the right folks on the council who are clear about the urgency and the uniqueness of this incredible disaster that's worldwide, and the reliance we have on any number of areas, including the energy sector, and what that's going to mean moving forward. I don't submit at all that this is going to be an easy year, but I think if we show effective leadership by trying to do the right work at the right time, we can make a difference. And making a difference means that the funds are available for the future. So I appreciate that. Are there any other comments? I'm mindful, and I don't want to cut this off. It's a very important discussion. I want to be on the call for the vote. It's important to me. I'm a yes. I indicated that certainly in thanking the people who worked on bringing this proposal before the council. But I also want to make sure I'm on the phone as quickly as I can, and I apologize for the COVID-19 briefing, where we go over the cases and the hospitalizations and the testing and what we know from the federal government and the number of heart-wrenching, difficult issues that require my immediate attention and decision-making.
Governor, this is
Are there any more? Yeah.
I got just one more comment, that we would be able to submit to staff any other thoughts as they might come to us in the next 2 weeks.
Good suggestion, at least I think so. I think that we do this better by undertaking and at least acknowledging ideas and concerns by committee members. So I would certainly support that, and I don't think that Director Moise or Sun Mountain Capital would be opposed to having our issues come to them over the next 2 weeks. And I want to give a caveat to Sun Mountain that if something happens, you know, at the 11th hour, that they might not be able to incorporate it. And so the sooner we do that, the more, you know, we support them to do an effective professional job.
We'll be pleased to receive those, Governor. Thank you.
Governor,
Any other?
this is Tim again, Jennings. Governor, I'm just looking, there ought to be a way to work with local banks as well and use some putting this money together and get the interest rate down from 6 to 12%, getting it down as low as possible. And there ought to be a way with local banks. Local banks are going to know who's in trouble, who's had a good history of payments and everything else on as far as the business they have in their community, and rather than reinvent the wheel. And I think Sun Mountain ought to look at that on some way to put together with your local banks. They're flush with money, and you know, you're 6 to 12%. I mean, you know, Buffett loaned 8%, got 8% on what, $20 billion that he loaned Oxy, and you know, I mean, and I don't know how much collateral they got, but Oxy is definitely having some financial problems. But you know, these guys, hopefully these will have enough security that they could get a lot lower rate than 8% or somewhere, if that's, you know, 10%. I mean, we ought to be able to get them a lower rate. I mean, at this time, with the amount of money that's out in the system, you know, 12% is highway robbery. And I mean, nobody can afford to pay that if you're a little mom and pop in the Mexico business, and that's just too much. You ought to be able to get with the bankers and come up with some kind of a plan to get local people to loan money to their local people, and a partnership with them to do it. Share the risk with them, and that way everybody can move along and down the road together. But I mean, that's my feelings, because everybody here is looking for a place to put their money. Every person in town wants to put it somewhere, and there's no place to put it. I mean, there's no bonds out there that'll pay. There's no, I mean, it's just crazy. And so for us to jump in the middle of it, then I don't know. You know, it's I don't have any problem with the idea and the concept of doing it, but I think we ought to work with New Mexico people to help New Mexico people, and you know, not necessarily just say that we have to be the white horse coming in all the way just with all government money. It doesn't need to be all government money. We can figure it out, but I think get people working together to keep everybody employed we can in this state, and that's what has to happen. So whether they're from where they are.
Thank you, Senator. I appreciate that. I think that all of these need to be taken into consideration. I'm certainly interested in whatever it takes that's still fair and prudent and ethical, provides a return, has a public-private partnership aspect that gets these resources out to the businesses that need that. So I'm hoping now that we could call the question. And I know that folks are, as long as the vote today on the fund based on Member Lavender's motion is clear. And for me, the clarity that I need, Member Lavender, is that we're approving the fund. We're giving Sun Mountain Capital our direction about things we think are missing or need clarity in being addressed. But the fund in its current context based on the memo would be hereby approved. by virtue of this vote. And amending that or changing it could happen at a later date. And that later date can't be longer than a couple of weeks. Is that the intent of your motion, Member Lavender?
Yes, yes, Governor.
All right. And is that the second, Mr. Treasurer?
Yes, Governor.
Okay. Then any further discussion on the motion? Hearing none, I'm going to call for the vote. All those in favor of approving the recovery fund, vote aye.
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 Any opposed? Anyone who abstains? The motion carries. I'm very grateful, and I do think it's good work to continue to really think about how things can proceed, but the fund in its current context is authorized and approved. I want to thank the members. I'm embarrassed that I can't continue to participate. The work of this council is incredibly important, and I just want to reassure the members that I would not jump off unless it was critical. I'm going to ask the Vice Chairwoman, the Land Commissioner, to take over the meeting.
Great.
Terrific. And I appreciate everyone's attention and thank everyone today for caring about New Mexico.
Thank you, Governor.
All right, thank you.
With that, Steve, are we on item number 3?
Yes.
Okay. All right, take it away.
I will give a brief SIO report. If you will look at the page 19, which is in your materials, you'll see that the first topic is distributions. I think this is important to cover. Over the past 12 months, the funds have distributed $999 million to the state. The next point is difficult to cover. The price of West Texas Intermediate oil as of yesterday, and I think pretty much this morning, was $24.25. It's in that $24 range today. The next point is also difficult to cover. The net asset value of the funds as of close of business yesterday was $23,877,000,000. Madam Chair, I think it's important for those listening to this call and for the council to remember that distributions for the current fiscal year and the fiscal year starting in July will not decrease due to the valuation changes in the stock market. The funds continue to be a stable revenue source for our state. And let's keep that in mind. Going down to item B, your investment committee meeting, the council meeting, and the governance committee meeting in April may change, so please be attentive to any communications you receive from our office. In terms of staffing matters, your staff is working from home. We're grateful for one of our staff being in the office this morning to coordinate the call. Thank you, Consuelo. We are continuing to recruit 3 professionals. Under legislative matters, House Memorial 9, we will be contacting the agencies included in this memorial for input. We will schedule a working group through a remote meeting process. This will include economic development, the land office, energy and minerals, the environment department, and the Office of Indian Affairs, and we will be working on that. I think it's important to comment on the balances in the Tax Stabilization Reserve and the Tobacco Settlement Permanent Fund. For the record, the Tax Stabilization Reserve, as of the last reading, has a balance of $1.1 billion. its asset allocation, I think, is important to keep in mind. Very little in cash, 36.6% in short duration fixed income, core bonds at 25.4%, core plus bonds at 18.8%, and a real estate allocation of 19.1%. The balance in the tobacco settlement fund is approximately $200 million. That concludes my report, Madam Chair.
Any questions for Steve? All right, if we could go to item 3B. Vince, are you there?
I am. Thanks, Madam Chair. Well, I'm as sure as I can be that the people on this call have been in close, or have been close with their information and news sources about the COVID-19 pandemic and the impact that the virus is having on the global economy and the response of the financial markets. So, as fast as things are moving, anything I could tell you that you don't already know would probably change in the next 15 minutes. Although I will tell you, my Bloomberg screen is really green today. We're having a great day in the stock market. A little bit of a bounce here. So let me spend just a few minutes, rather than on news flow and things like that. Let me spend a few minutes on how we're positioned, a little bit about how we got there to start with, and then things that I think we need to be doing right now. So back in the summer of 2017, we did an asset allocation study. It was one of the most important activities that we do, and one of the most important decisions that we make as a group. We do a study like that every 3 years. We've done one in 2011 and 14. So in 2017, it was time for another. The primary conclusion that came out of that study that year was how expensive the U.S. stock market had gotten, and how our long-term forward-looking return forecast for equities had become.
So Carlos calling him. I can't talk to him. Do you want to call him?
So we had already been diversifying the investment portfolio, but our conclusions in the summer of 2017 made it seem prudent for us to pull back on our publicly traded equity allocation. So we cut our target rate to cycle lows, which is the lowest allocation we felt we could hold.
Can I have you pause for 1 second?
Sure.
If I could just remind everyone to mute their phones. I think we heard Member Messina. Thanks. All right, thanks, Vince.
Okay, sure. So we cut equities down to our cycle lows, which is the lowest allocation we feel like we can hold based on our return assumptions for all asset classes, and consistent with the reasonable expectation of making our long-term return of 7%. We forecasted it'd take us several quarters to get our actual weight in equities down to target, because most of that capital needed to be redeployed into the private asset classes, which takes us a little bit longer to get deployed. Also in 2017, in conjunction with the asset allocation study, we did a liquidity study, Liquidity 1.0, and we modeled a 35% drop in the stock market and made calculations on how much liquidity, how much liquid assets we would need in that type of environment to properly manage the portfolio, and also to have certainty in making our monthly distribution. Liquidity 1.0 resulted in us restructuring the fixed income portfolio in order to raise and structure that liquidity, and we did that over the next few months. In the first quarter of 2018, our economic models started alerting us to the fact that we'd entered the late cycle portion of the economic cycle. Part of our investment process is when we change positions in the economic cycle, for instance, moving from early to mid or mid to late and so forth. We take a guess at how long that new phase will last. It's solely for planning purposes. We call it our planning horizon, and to help guide us in our activities, and nothing more really. It's something that we expect along the way then to modify as things unfold. This time we didn't have much modification to it. Back in first quarter of 2018, we pegged the first or second quarter of 2020 as when we might leave late cycle and enter recession. That gave us roughly 2 years from then to get our equity weights down to target, raise and structure that liquidity, and generally to get everyone on the same page in terms of what looked like was coming our way. So that's a little bit of background. Where we sit today here in the first quarter, we feel like we're in a global recession and that the U.S. economy is also in recession. We've not seen the economic numbers yet, of course, they haven't been produced. But when we do see them, I think they'll shock us a little, and we do have full expectation that they will show that a contraction is underway. Right now, according to our planning horizon, we pointed out that, I'm sorry, lost my place here. We pointed out often in the education process that we never know what will throw us into recession. No one saw COVID-19, just like no one saw the timing of the subprime mortgage crisis in 2008 or the bursting of the tech bubble in 2000. But our investment process does get us ready and has us thinking ahead. Financial markets have reacted swiftly to the impact of COVID-19 on the global economy, and stocks are down 34% from their peak as of yesterday. We're doing better today, which is very near the 35% drawdown that we modeled in Liquidity 1.0. So all the background really means is we were about as prepared as we could be for what's unfolding in front of us today. As of January 31st, 2020, and maybe get your pen out, you might want to scribble these numbers down. As of January 31st, 2020, 3 weeks before the markets began cascading, the permanent funds and our clients held $1.1 billion in cash on their balance sheets and in the private asset pools. We had another $1.3 billion in short duration, highly liquid fixed income securities, and another $3.3 billion in core bonds, a large portion of those which were treasury bonds. So a total of $5.7 billion in safe, accessible liquidity. And 49.4% of our capital was invested in assets that produce a preponderance of their expected rate of return in income, cash income, and as such are mainly not subject to the type of price declines that we're seeing in our publicly traded equity portfolio. So the people on this call, the investment team, the investment office, our consultants, and the council have been very good stewards of the permanent funds ahead of the crisis that we're dealing with right now. One of the great lessons of the great financial crisis in 2008, 2009 was the importance of liquidity, income, and cash flow, and we have heeded that lesson. So what should we be doing right now today? Well, I think the first step is to try to get something of a handle on how long this environment might last for planning purposes, just like we did in 2018 when we entered late cycle. The trouble is right now there really isn't enough information to do that with any probability of success, but our investment strategy team is working very hard on that, and we hope to report to you in subsequent meetings. Next, I think we need to be very vigilant in monitoring the markets and rebalancing our portfolio wisely. Another lesson from the GFC in 08-09 was not only to have the liquidity rebalance, but to actually do it. We're on top of that as much as we can be. We calculate our position every day. We can only trade at the end of the month, but we know generally what we're going to need to do when the time comes to rebalance. Next, we need to closely monitor our investments for signs of trouble or distress. So far, we've had relatively little in issues, but we do have one issue now, and we're looking for others. Next, we need to be vigilant but conservative in seeking opportunity. Over the last 10 years, we've worked very hard to rebuild and reshape our manager roster. We've created a world-class stable of managers covering most asset classes available, and our asset class directors and analysts are in very close contact with them, not only monitoring existing investments, but looking for opportunity in new investments. Starting next month, you'll see new investments born out of the opportunities that are being created right now. So with that, Madam Chair, I'll stop and field any questions that the council might have.
Thank you, Vince. And, the council members, thank you and your staff for prudent investment and diversification in this time. So thanks for reminding us about that. So questions for Vince?
Madam Vice Chair, this is Linda Eisen.
Member Eisen.
Should we be looking at the tax stabilization reserve and making it even more liquid? I guess that's really a question for our executive branch on and whether we're looking that we might use that fund, whether it's due to COVID-19 or whether it's due to the oil and gas crisis, and how liquid we need to keep that.
Steve outlined the asset allocation of that fund for you just a few minutes ago. All of that fund, except I think he was 19%, he listed for real estate. So 81% of that fund is liquid on notice. It could take us a month or two, maybe even 3 to reduce the real estate. We kind of have to see how that is playing out right now. But at least 81% of that fund is we can liquidate that on notice.
Member Eisen, are you finished?
Yes, I am. We've done a terrific job on this liquidity, and I knew that it would take a while to actually use those funds. So that gives us ample time if the funds should be used to provide the requested liquidity.
Any other questions for Vince? All right, great. With that, we're going to move to agenda item 3C, the performance report. And I'm told by Charlie we have Marcia and Matthias from RDK on the line. Is that still correct? If you all could please reference page numbers as you go through your report. Thank you.
Sure. Thank you, Madam Chair. January, I think at this point is fairly dated. And as Vince mentioned, year-to-date numbers are substantially lower to that. And I thought I'd make some broad level comments and provide maybe more up-to-date numbers just across the broad market. It's obviously been changing on a daily basis. We've seen a tremendous amount of volatility. We've had more substantial days with plus or minus 4% moves than we've ever seen. Some days have been up and down double digits. So it's an environment that is really in some ways uncharted waters, and we're obviously monitoring that very closely as a result. So maybe if I might make just a couple high-level comments that are probably going to be more relevant and applicable in this current time. Vince already did a tremendous job talking about the items that we ought to focusing on. Liquidity, of course, and making sure we look down the road. The office is doing a great job there, tracking the market values, having a good handle on where the portfolio is relative to policy allocations, and ensuring that rebalancing activity takes place to not only control risk, but also to be able to take advantage of opportunities as they present themselves. And this type of market, as painful as it is, there's always opportunities on the other end of that. I would also just remind everybody, because frankly, we're getting overwhelmed on a daily basis with the news cycle. These are sovereign wealth funds. These are perpetual, permanent funds with a long time horizon. So it's easy to get caught up in the daily news cycle. But as I mentioned, we've got a long-term strategy, a strategy that's been put in place and gets refined year after year. And as a result, I think you're, at least on a relative basis, very well positioned to handle this type of environment, despite the pain that likely will come of it. To Steve's point, it's not immediate because you've got an amortization within your spending policy that looks back a number of years, so there's no immediate impact. But sooner or later, those valuation changes will find their way through. Hopefully, with the large percentage of the total return coming from income, some of that will be mitigated. As we look forward, and this is an important year. Vince and Mikhail were out to see us in Portland a few weeks ago, and we discussed forward-looking return assumptions, capital markets, essentially planning for the future. And at that point, we had reviewed the fresh off the press 2020 capital market assumptions. You may recall that we review those on an annual basis. Well, a lot has happened in the last 3 or 4 weeks, and so we're taking a close look at that. Originally, there were some notable reductions to the expected long-term return for a lot of the core asset classes, both equities and fixed income. We've seen equities returning 30+% last year, and fixed income yields have continued to come down and resulting in very strong fixed income returns even. So as a result of that, we were pulling our assumptions back quite a bit, and I know you haven't seen these numbers, but wanted to foreshadow that. Now, again, these are long-term assumptions, and we're always cautious to make changes just by ebbs and flows that might happen in the capital markets. But these are obviously very substantial drawdowns. In fact, this is the quickest drawdown of 30% that we've seen in history, even more so than what happened earlier, even through the Great Depression. So the speed is unprecedented, and so just rest assured that we're being very deliberate and thoughtful about that. We don't know yet if we'll update the numbers, but we're certainly going through the exercise of re-underwriting to make sure that we're working with relevant and up-to-date numbers that ultimately inform all of the modeling and the recommendations and the decisions that the council makes as part of that. So there's lots we don't know. We don't know when there will be a vaccine. We don't know how quickly COVID-19 will pass. We're just not experts in that. But what we are confident in is that a well-diversified portfolio, very much like what you have with all the right protections put in place, is going to weather this next storm reasonably well without sacrificing long-term returns. So we're still very encouraged by your positioning and all the things you're thinking about going forward, and hopefully collectively we'll find some opportunities going forward as a result of that. So maybe I'll stand for any questions or comments that the council might have, and certainly as we come to the close of this month, we'll have a much better opportunity to provide perspective on exactly what the portfolio positioning will look like at that time.
Thank you, Matthias. And before I go to questions, some moving furniture behind you. Can I just remind folks to mute their phones?
Yeah, it's not me, but I am getting some background noise as well.
Yeah. I'm hearing a dog. Can folks mute their phones, please? All right, so member questions for Matthias.
Whoever that is doing dishes, can you please hit *6 on your telephone? I didn't go through.
Any questions for Matthias? So with that, we're going to move to agenda item 4, and these are our investment votes. Before I turn it over to Member Eitzen for her committee report, I did just want to let folks know I'm going to take a chair prerogative, and I would like to do each of these votes actually as roll call votes. So I'm asking now for everyone to just be aware of that. Maybe once we start roll call, if everyone can unmute at that time, but I will turn it over to Carrie to call roll for each of these votes. With that, Member Eitzen on agenda item 4A.
I'll be brief. The investment committee met, and we were very happy to be joined by members of the SIC as well. I really appreciate everybody's participation and interest. We reviewed the Bain investment before the SIC today and the Axia contract before the SIC today. We voted unanimously to approve that for recommendation to the SIC. The investment committee also voted on a Brookfield fixed income fund and some other matters which are not before the SIC because they were not deemed as time sensitive as the issues brought today. We did not look at the $100 million recovery fund, nor did we look at the contract for derivative overlay. So those were not brought before the investment committee. So of course we have no recommendation on that, and those will be discussed for the first time at the SIC level. Thank you, and that's my report.
Any questions for Member Eitzen? Okay, with that, we're going to go to agenda item 4B. I'm going to turn it over to David. I'm not sure if Richard is still on the line for Mercer. I thought I heard him earlier. And
I'm
David,
here.
if you could just sort of, I'm going to sort of turn it over to you, and you can call on folks. I don't know if we want to hear from Bain as well, and then give your presentation, turn it back to me, and I'll open it up for questions.
Thank you, Madam Chair. Good morning. This is David Lee, Private Equity Director. I'm joined on the phone by Chris Cassidy. We work together on the private equity staff. Also from Mercer, Richard Pugmire, Alan Waldrop, and Amy Ridge. And then from Bain Capital, we're joined by Darren Abramson, Philip Michler, and Steve Radakovich. I just wanted to make some brief comments, and then I was going to turn it over to Bain for some brief comments. And then any of us are happy to answer any questions if there are any, and we'll turn it over to you. Bain Tech Opportunities Fund. This is a fund strategy that will focus on mid-market buyouts and late-stage growth investments. This buyout and growth mix will introduce both control and minority transactions. The fund will focus primarily on North American companies, and it'll pursue investments in technology and technology-enabled businesses, specifically the priority industries of application software, infrastructure and security, financial technology and payments, healthcare, IT, and internet and digital media. Bain Tech Opportunities will be a concentrated strategy with a target of 15 companies in the fund. The target size for the fund is $1.2 billion, which includes approximately $200 million of general partner commitment. The average check size is going to be between 50 and 200 million for these investments. And I wanted to also say that historically, Bain Capital funds have been very difficult to access, and staff and consultant believe that Bain would be an excellent partner. This is the initial fund for this specific strategy focus, but Bain has a over 30-year track record of successful technology investing and also very low loss ratios of about 2%. For this fund, there are 18 dedicated employees with plans to add 2 or 3 more to the portfolio group, and they're located in Bain's Boston and San Francisco offices. Staff and consultants are recommending a commitment of up to $50 million in Bain Tech Opportunities Fund, and this would be the first commitment to Bain Capital. And with that, I'd like to turn it over to Darren Abramson of Bain Capital.
Thank you, David, for the introduction. Thanks to you and Chris for the thoughtful engagement throughout the due diligence process, to the Mercer team, and thanks to all the members of the council and those assembled for the opportunity to present. As David mentioned, my name is Darren Abramson. I'm a managing director at Bain Capital, where I've worked for almost 15 years in our private equity business, focused on technology before launching the Tech Opportunities Fund last year. And David did a great job introducing the fund, so I'll keep my remarks brief. But just to give some context for our firm more broadly, Bain Capital is one of the largest global alternative asset managers with over $100 billion of assets across a range of investment strategies. Since we were founded in 1984, we really built the firm around a differentiated approach from that of many of our competitors, an approach that's based on very deep and rigorous due diligence and a strong focus on adding strategic and operational value to the businesses that we invest in. Put simply, our goal is to partner with management teams to help them build great businesses, and importantly, to be highly aligned both with those management teams and with our investors and limited partners. Across all of our funds, the employees and partners of Bain Capital are the single largest investor, typically at between 10 and 15% of the capital, which is quite different than most in our industry. And as David mentioned, that's true with the Tech Opportunities Fund as well. Technology has been a key focus area for us as a firm, dating back to throughout our 35-year history. It's been a significant component of our private equity activity, where I spent all of my time over the past decade. But we also have a very active venture capital business and a lot of technology depth in both the credit and public equity markets. And as a result, we have developed a fairly unique level of expertise and set of relationships in the technology space, and in particular in the subverticals that were mentioned: application software, infrastructure, cybersecurity, financial technology, healthcare IT, and the internet space that are the core focus of the fund. The Tech Opportunities Fund is really a natural extension of that vertical depth and experience that will focus, as mentioned, on the mid-market buyout and late-stage growth areas of the technology ecosystem. This is a very active and, we think, very attractive segment of the market, but one that historically has been a gap in Bain Capital platform, falling between the earlier stage venture capital activities and the larger private equity efforts. Since launching the fund last year, we've built out a dedicated team of 18 investment professionals with strong investment and operating experience in technology. And importantly, many on the team joined either from other business units within Bain Capital or have spent time at Bain Capital earlier in their careers, which ensures a strong alignment with the approach to due diligence and value creation that I referenced earlier. And so far, we have built out a very robust pipeline of investment opportunities, completed our first 2 transactions of the fund, and are seeing real value and differentiation in our approach that we believe is resonating in the market. Again, would like to just thank you all for the opportunity. We are truly excited to be considered as partners and stewards of your capital. And with that, I'll wrap up my comments and happy to answer any questions.
David, did you want Mercer to add anything?
We were trying to keep it brief,
Great.
so
Okay.
I think they're happy to answer.
All right, we're going to turn it over to member questions. Do I have
Madam
member
Vice
questions?
Chair, this is Linda Eisen. Are we ready for a motion?
I guess so.
Based on the recommendation of the Council Investment Committee, Private Equity Advisor Mercer, SIC staff, and general fiduciary oversight of RBK, I move that the State Investment Council approve a commitment of up to $50 million to Bain Capital Tech Opportunities Fund, LP, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policy, negotiation of final terms and conditions, and completion of appropriate paperwork.
Second.
Is that member Lavender?
Yes, it was.
Okay, so with a motion by member Eisen and a second by member Lavender, any further discussion on this motion? All right, Carrie, if you would call the roll on this vote.
Certainly. Commissioner Garcia Richard.
Yes.
Mr. Peter Frank.
Yes.
Ms. Linda Eisen.
Yes.
Mr. Harold Lavender.
Yes.
Mr. Lee Rothen.
Yes.
Mr. Tim Jennings.
Yes.
Mr. Mike Messina.
Before I cast my vote, I just want to alert you all, I'm in a remote area and I am losing service. I'm in favor of all the voting items because I was at the investment committee meeting. I vote yes on this. In case I'm not available, I just wanted you to know that it's a phone problem.
Thank you.
And Mr. Nicholas Tayet.
Yes.
And Treasurer Eichenberg.
No.
Carrie, would you announce that? It sounded like 7-1.
The vote was 8-1.
8-1. Okay.
With Treasurer Eichenberg, the only no that I have recorded.
Okay, so with an 8-1 vote, agenda item 4B has passed. We're going to move now to agenda item 4C. And I didn't get confirmation on this, but I'm wondering, do I need to ask Axia if they are on to exit the call at this time?
Vince, do we have Axia on the call?
No, they didn't call in because of this agenda item, Steve.
All right, great. So, Vince, if you could please give us the presentation on agenda item 4C.
Okay, we'll do, Madam Chair, thank you. So in your packet, you see a condensed memo from me in the office recommending that you re-up with Axia for another term. We first hired Axia in March 2016. We extended that contract for a 2-year contract. We extended it for 2 more years in February 2018. That's up, and we think we should extend it for another 4 years, or extend it for a 4-year term. The fee in there for each year is listed, and that also includes travel expenses and everything for up to 4 trips a year to New Mexico. Actually, it's done a fantastic job for us in 2 ways. One, helping us wrap up the hedge fund portfolio that existed back then. And lately, since that portfolio has been wrapped up, working with us in the private credit area. A number of the funds that are in the private credit portfolio are Axia recommendations. So just to be concise, we recommend that we extend that contract, and we do so in a 4-year term.
Thank you, Vince. So with that, if we could have questions from members.
Madam Vice Chair, if there are no questions, are we ready for the motion?
Member Eisen, yes.
Based on the recommendations of SIC staff and based on the recommendations of the Council Investment Committee and SIC staff, I move that the State Investment Council approve renewal and extension of the Council's contract with Credit Alternative Investment Advisor Axia for a period of 4 years, under terms memorialized today, subject to and contingent upon New Mexico legal requirements, New Mexico State Investment Council policies, negotiation of final terms and conditions, and completion of appropriate paperwork.
Controlled, I'll second.
All right, so with a motion by Member Eisen and a second by Member Lavender, any further discussion on this motion? Carrie, if you would call the roll on this vote.
Certainly. Commissioner Garcia Richard.
Yes.
Mr. Peter Frank.
Yes.
Ms. Linda Eisen.
Yes.
Mr. Harold Lavender.
Yes.
Mr. Lee Rawson.
Yes.
Mr. Tim Jennings.
Yes.
Mr. Michael Messina.
Yes.
Mr. Nicholas Tejas.
Yes.
And Treasurer Eichenberg.
Yes.
That's a 9-0 vote?
That's correct.
All right, so with a vote of 9-0, agenda item 4C passes. Next, if we could move to agenda item 4D, contract for derivative overlay services. And Vince, I believe this is you.
Thank you, Madam Chair. So some time ago, we had a derivative overlay service in the shop. We mainly used it for rebalancing, but we didn't use the service quite as much as we thought we would in terms of doing the monthly rebalancings. So we let the contract go. With the latest sell-off in the markets and the potential for more, we think we should re-engage this service. So previously we hired Parametric Portfolio Services. They did a very good job for us. That would be our number one firm to talk to. But there are competitors out there, and so we're likely to talk with several firms before we bring you a recommendation next month. Mainly what we'll use this for, perhaps in rebalancing, but particularly if we get more of a -50 or more down on the stock market, oh, no.
I can still hear you, Vince.
Still there? Okay, sorry. Particularly if we get more of a -50 or more on the stock market, we'll start to run out of liquidity. Not in total, but liquidity will start to dry up if we get that far down in order to rebalance with. So the choices.
This is Steve. Vince, can we check, Madam Chair, can we check to see if we still have everyone on the line?
Okay.
Consuelo, or are we all still connected?
Peter Frank is here.
Commissioner, are you still on the line?
Yes, I'm still here, but I didn't hear Consuelo.
Harold's here.
I think we're okay. Thank you. Sorry for the interruption, Vince.
No problem, Steve. So if we get stocks down, 50% or more here, our available liquidity will start drying up for rebalancing. We'll still have plenty of liquidity to, make our distributions and other trading activity, but our ability to buy stocks and keep our weights, to our targets will start to dry up around -50. We can do this in the derivatives market with a service like this overlay. So effectively what it means is we gain stock exposure through buying S&P 500 futures contracts, and we sell treasury bond contracts on the other side. So it's the same as selling bonds in the cash market to raise cash to buy stocks. We can just do all that in the derivative markets. It's a standard thing funds do. Like I say, we had that service in place before, just weren't using it. It didn't seem worth the money, the fees that we were paying. But I think here in this environment, in case these markets had substantially lower, we want to get this in place as a backstop.
Vince, this is Steve. You mentioned that you may want to bring back a recommendation regarding a specific vendor next month. Now, that's not exactly how the motion is written.
We should be able to bring a recommendation, Steve. It may or may not be the firm that we used before. There's competitors out there we need to talk to.
All right, but you're not concerned with a delay for another 30 days?
No, I don't think so. I think if markets really start to head lower here, we've got plenty of liquidity to handle it. It's just once we get past about 50%, it starts to dry up. So I think we're fine with the 30 days. If we somehow got in a situation where it wasn't fine, we potentially could, check to see if we could have a special meeting.
Okay, I'm going to open it up for member questions at this time.
This is Linda Eisen. Are we really going for a motion at this point then, or are you just informing us that you will be bringing back a recommendation next month, unless we have a special meeting sooner, for an overlay manager? So in other words, do we actually need to vote on anything at this time?
Well, we can leave that to the chair. Normally we come and request to do a search, get approval to do a search, and then do the search and come back with the results.
So if you don't need a vote to do a search, maybe we shouldn't do the vote. Could I get an answer on that from someone at the SIC? Do we need a vote?
This is Evan. We do not need a vote on this agenda item.
Commissioner, we do not need a vote on this.
Can I hear from fellow members on this recommendation, just to move it either to a special meeting or to the next SIC meeting when we actually have a vendor to vote on?
This is Peter Frank. I think if we do not need a vote according to Evan, that's fine. I'm in favor of this, and I look forward to a vote when we actually have a recommendation at next meeting.
I agree.
I agree.
Any other
Cam, I agree.
Any other questions on this agenda item? Okay, with that, thank you very much for that presentation, Vince. We'll look forward to a recommendation on a vendor.
Thank you, Madam Chair.
With that, we're going to move to agenda item number 5. Is Brent on the line?
Madam Chair, I am here.
Okay, take it over.
I'll be brief. I'm on page 153 of the diligent material. I just wanted to point out a couple of things, if I may. As with the February RBK report on returns, you see the investment holdings report for February. I just want to emphasize, as I pointed out in the material, this is the February report. The big market drawdown that we've had is not reflected in these numbers. It'll be coming in March. Everybody should realize that we still have 5 trading days after today left in March before we're at the end of the month. I also wanted to point out on number 4, the SBIC, since they were in our discussions, they did invest $46 million in the Core Plus bonds pool this last month. This money is likely to be drawn down as they deploy the capital. And that's something that probably before the market correction that we're experiencing now probably would have been with us a little bit longer, but as they deploy the money, it will likely be drawn down. And then, excuse me, I'm losing my voice. On page 14, under the consent agenda, even though I didn't have any comments, I just want to make everybody aware. If you have any questions on the budget to actual information, please feel free at any time, day or night, to reach out to me, and I'm happy to respond. And then lastly, I just wanted to point out, assuming the stars are aligned next month, we do have an upcoming May deadline for our fiscal year 21 budget, and we'll have that material to you for the next meeting.
Thank you, Brent. And I was just remiss for those joining us for the public. This is agenda item number 5, finance matters, informational reports, and that was our Chief Financial Officer, Brent Shipp, giving his CFO report. Any member questions for Brent? Very good. Thank you very much. So now we're going to move to agenda item number 6, closing matters. Any old or new business? I guess we will just stay apprised for how next month's committee meeting will take place, council meeting will take place. If we have no old or new business, we're going to move to agenda item 6B. The next SIC meeting is Tuesday, April 28th at 9 a.m. But I think it remains to be seen how this meeting will be conducted. Steve, did you want to weigh in on this at all?
We'll be advising everyone, Commissioner. Thank you.
Okay, with that, we're going to move to agenda item 7, public comment. And we've got public comments. Charlie, I believe, was going to read those aloud.
Commissioner, Madam Chair, this is Charles Woolman. We did receive 2 short comments from members of the public when we submitted the agenda. The first one comes from Gary Ferguson. Mr. Ferguson says, probably time for a massive NMSIC investment in New Mexico renewable energy. The longer you wait, the harder it becomes, and New Mexico could lose the race with our surrounding states. Oil gas revenue will never be as reliable as the sun and wind energy. Carpe diem. Comment number 2 comes from Kenneth Knoll. Both these gentlemen have commented previously at other SIC meetings. Thank you for your engagement. Kenneth Knoll, his message is, I encourage the SIC to invest in New Mexico's small business community who will need support to recover from this economic downturn. InvestNewMexico.us is setting up a New Mexico Pandemic Fund. The fund is not a grant or loan program. It is an investment for New Mexico companies. The goal is to restart businesses and share in the growth of those companies. That is the end of comments from the public.
Thank you for reading those, Charlie. And I just wanted to let the public know at this time we don't respond to public comment, but if you are on the call today and you had trouble hearing or accessing, if you couldn't find the link to the agenda or anything like that, please let the SIC staff know, because I believe it's highly likely that we may have another telephonic meeting next month, depending on how things go with the virus. So with that, I will take a motion to adjourn. Who is that?
Second. That was Harold.
All right, so a motion from Member Lavender to adjourn, and a second from
Lee.
From Member Rossman. And with that, we are adjourned. Thank you all. Yep.
Stay healthy, everybody.
Thank you. We'll see you. Thank you.